Hello everyone and welcome to Day Trader S&P 500. Today is Tuesday, October 17, 2023. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. As always, we're going to get our YouTube subscribers caught up with our monthly newsletter subscribers. And let's start with the US10yr. We're looking at a daily chart. This wave 1 here at the cycle degree is from the 2020 low, so that was about 2.5 years. And we have a 2 down here. Let me get that into focus. There we go. By the way, that came from obviously way less than 1%, huge move up. There's wave 2. Okay, now we see wave 3 developing at primary degree. That's 1 with a circle. We have a 1 up, a 2 down, and 3 is way up here. Okay, this third wave is subdividing or extending. You can see a 1 of intermediate degree, 2 down, and there's 3 and there's 4. Okay, this wave 5 and the larger wave 3 with a circle around it will go over 5, and this wave 3 here at cycle degree will go, well, it gains equality with wave 1 at 7.255%. That'll take a while. This wave 1 took 2.5 years. This wave 3 is from April. Okay, so we'll let that play out, but rates are higher for longer. Okay, and the Fed will follow the chart, will follow the waves which go before the Fed raises or lowers rates. Okay, you can see we have within this third wave here in parentheses, that's intermediate degree, we have a wave 4 pullback, which is at the 382. The 50% is at 4.476, and the 618 is at 380. So wave 4 down should hold below the wave 1 high, and all three of those retracement levels are above that high. Once 4 is done, we'll get 5 up above the wave 3 high, and that will complete wave 3 with a circle at primary degree. So we'll see if this 4 goes any further. Once a move above the wave 3 high of 4.886 happens, that'll be confirmation that wave 5 up is in play. I want to show you guys an alternate count for the S&P cash 500, if you will. I put out last week to our annual and monthly newsletter subscribers. It labels the 3 is in print at primary and circle. Okay, this is the alternate. This is the main count, which shows this high from at least the 2009 low, if not going back to 1974, 1982. But we're focusing on the alternate count here. This is a 3 up. It calls this 4 down. This calls this move down as a 4th wave. It's a 382 correction from the 2009 low. Follow the alternate. We got a 1 up, a 2 down, and a 3 up. Okay, 4 should hold above the wave 1 high, which is 41.95. So far it has held. However, I want to point out this similar high going back to February of 23 was broken in futures. This level here, similar level, different number. So the futures usually lead, so we might anticipate that this will be broken. But for the bulls out there, there's your alternate bullish wave count. Obviously, if 4 holds, then we'll get a wave 5 up to above the wave 3 high. That's in blue. Okay. Otherwise, we've got an A down in parentheses, a B up, and C down equals A at 32.79. Again, I don't know how many times I've said this, but it bears repeating. A 5 down A, 3 up B, 5 down C is a normal correction in a bullish market. Okay, it'll take it way down from 4,800 to 3,200, but it is a normal ABC 535 down up down correction. We'll see if it plays out. There's your alternate count for the bulls. Let's get into the ES. Here is a daily chart. Let's make that bigger. Okay, you can see the Fibonacci time span there. Okay, we've got a 1 down from the B wave high on 727. We have a 1 down, and circle, 2 up in circle, and then the third is extending or subdividing with a 1 in parentheses, a 2 in parentheses, and that high so far was on the 12th, I believe it was. Yeah. Okay, so there is the high at 44.30.50. It fell between the 50% and the 618. That is a trigger for you bulls. A move above this high right here, 44.30.50, brings these targets in black into play. That means a move above here means wave 2 up is not over yet. There's the 618 at 44.59, the 786 at 45.20.25. Where is it wrong? Make or break, 43.97. This 2 up cannot retrace more than 100% of this 1 down. Okay, that's the upside trigger. Downside, we could say this is a smaller trigger here at 43.40, that low right there, because we'll get to a smaller degree of trend, but that would be a 1 down and a 2 up. Anyway, on a bigger scale, this wave 1 low here at 42.35.50 is the trigger, which brings these wave 3 targets. If this is 1 down in parentheses, this is 2 up in parentheses, it brings these 3 down targets into play. You can see these this Fibonacci time span from TradingView has a turn date of 10:18 and the next one at 11:09. We'll get into those in a little bit here. Let me go escape out of that daily and get into the hourly. Little busy here, a lot going on, but there's that 42.35.50 low, which is right there. Okay, that's the daily. There's the hourly, and you can see all the direct hits we had on the way down. Again, repeating, I was out for a week, so that's the only reason really why we don't have any direct hits here, but we're starting to get them again, and we will. Anyway, we're looking at an A up, a B down, and a C up. C equaled A at 44.22.50, and I think we had an actual at 44.30.50. Okay, that again is that wave 2 high that you see back here on the daily. Okay, getting back to the hourly, we could call this a leading diagonal. We'll see how that plays out. And we've got an ABC up, or C equals a 1.618 up here. So we'll see how that plays out here. Okay, but we're doing triggers and targets. Okay, upside trigger, upside targets in black, downside trigger 42.35, downside targets in red. That's where we are right now. Let me get you guys to our most recent report yesterday morning. Let me see if I make that right. Yeah, that's October 16, and you can see here's everything in a nutshell. All right, upside trigger targets, downside trigger targets. That right there is that other 42 whatever it was here, 43.40.75. okay, we could call that a trigger too. We'll bring in shorter term lows, break that low right there. Okay, that's where we are. There's a 10:18 turn date. Oh, I wanted to show you guys our that's the Fibonacci time zone up there, okay, from TradingView, which I recently discovered. The turn dates I've been doing for over 25 years, since 1997. There's the turn dates there, 10:24 and 11:16. You can see the 10:24 there. And interestingly, again, I've always started these turn dates from a high, looking for a low 55 days later. But this one here, for some reason, I started from a low, and you can see the slippage. The most it is a day. Okay, the next turn date in this sequence is 11:16. So we'll see how this one plays out. I'm going to start doing more from lows, because this one obviously has very little slippage. A minute, a day, none. So we'll see how November 16 works out. Okay, we'll leave you guys with this picture right here. Triggers and targets. Monthly subscribers are loving those. It's helping them out with their trading. So until next time, take care, everyone.